Hello guys, this is Mariano, the Trading Parrot. My first video in Coin Bureau trading. We're gonna be covering the big picture of Bitcoin, Ethereum, and potentially some altcoins as well. In today's video, it's gonna be packed with information. We're not just gonna cover the 4-hour and daily timeframes for the short-term price action expected from Bitcoin, but I'm also going to do an analysis on the perfect equation for Bitcoin to break out into all-time highs. Make sure that you don't miss that part. I'm also gonna share my preferred levels of buying the dip in case we saw some further correction in the upcoming weeks or months. Make sure that you don't miss the part where I cover the Bitcoin capitulation from miners, what I'm expecting the price to do during the next month based on past performance. As I mentioned, this is my first video on Coin Bureau trading, and I will really appreciate those likes and comments down below. I promise to read all your comments. Let me know if you want me to review any specific coin. I'll be putting 1, maximum 3 videos per week. Let's get into the content. Guys, nothing in this video is financial advice. I just share my opinion, the way I see the markets. I can be wrong, I can be right. Consider this information as educational content or entertainment if you want. If you want to trade Bitcoin, have a look at the links in the description. In Coin Bureau trading channel, we have amazing discounts, the lowest fees that you can find, starting with Bybit, OKX, and Bluffin. Let's get started with the 4-hour time frame. We are seeing some interesting price action on the 4-hour. After last night putting a new lower low in here, we started forming a bottoming formation on the 4-hour. I'm not claiming that this double bottom necessarily needs to be the final low for this move down, but it's got good chances at least of becoming some sort of dead cat bounce. At 2 a.m. we managed to close a candle, this one in here, the second green, and this is showing strength. We have a couple of targets that we need to review for the very short term. We can talk about the median, which is this dotted line form in there in the RSI, calculated using statistics on the past 150 candles, and that's giving us roughly 54 RSI. That's a conservative target, I will say, and then we have a more aggressive target at the top end in here formed by this trend line that has been resistance. That is located roughly at 66. So we have 54 and 66, a more aggressive target. Let's have a look at where is that in the price using reverse. 54 is at the moment located roughly at 62k. 62k has been the support of all this price action in here at the top of the CPR levels of the month of October. And it's no surprise the price could make a full journey to the scene of the crime. We could call that a potential retest for further continuation down. Regardless of what happens, what we get there, it seems like a low-hanging fruit for the price to come and grab the fair value gap and the potential liquidity of late shorts that enter during this impulsive move to the downside. The more aggressive target here at the top end of the RSI at 66, it's currently pointing at this order block at the top end of the price, pretty much matching with the highs in here at 64k. Again, that is not surprise if we manage to break above that resistance at 62k. An obvious next target is the liquidity formed by the order block. Then if we manage to break above RSI 66, which I already qualify as something aggressive for a target, then we will have something that I typically call a global breakout. A global breakout takes that name because we have a trend line formed by the tops, and if we follow this trend line, it shows us that level could be a heavy resistance, because at the moment we have a channel coming down on the RSI, and breaking above this could turn things around for the price action. If you think about it, after this impulsive move here and this retracement, getting above that will confirm that this move down wasn't really able to damage the bullish continuation. But let's not get ahead of ourselves. Let's focus on the conservative and the slightly more aggressive target of 66. And let's also appreciate that today is Friday, so we are about to start the weekend price action with lower volume, and we need to keep an eye on the closing price of CME. We are hours away from closing the price, and I think it's worth also mentioning that we have some CME gaps that are unfilled from the previous weeks. Particularly on the weekend of Sunday 29th of September, we produced a CME gap from 66 to 65k, and the price when it went up in here couldn't manage to close the gap. That means that there is heavy liquidity located between 65k and 66k that is at the moment attracting the price. The problem is that we also have a CME gap on the lower end from 54 to 54.5, and to fill that gap fully we need to make a move of 11% to the downside, roughly 7k down, and to fill this one we only need to move 8.5%, roughly 5k. So just from the point of view of CME gaps, the one at the top seems to be an easier grab compared to the lower end. Going into the daily price action, we can observe some pretty interesting patterns. I'm gonna give you a summary because it's the first time I publish a video on Coin Bureau trading. If you've been following me on the Trading Parrot, you probably are well aware of what's the current structure on the daily price action. We can see in here that we printed a lower low on the 7th of September at a price action of roughly 53.5k. We've been printing lower lows since pretty much March this year. We had this low on the 7th of September, but what's special about this low is that it's not a lower low relative to the 5th of August when we made it to 49k. At that point, we started looking for potentially a break of structure. We were observing this high in here at roughly 65k, and we were on the lookout for a higher high. That's what we made in here when we made it to 66.5. At that point, the fear and greed index went back into greed, but we knew we needed to be looking for a low. We had a pretty impulsive move from 53.5 all the way to 66.5, and we got a low in here. Fortunately, it's not a lower low relative to this low in here, so we were for the first time able to say we are putting higher highs and higher lows on the daily, and that was really promising when it comes to this forecast path that we've been following for months in our channel. And our expectation is that after putting this higher low in here, we were ready to challenge the top of the megaphone pattern. The problem now starts with these last two legs that we have in the daily price. Number one, this move in here couldn't make a higher high. To protect the bullish structure, we should have made at the very least a move up until 67k. In that way, we can say that the structure is unbroken. But instead of that, we had this big wick to the upside. We prepare ourselves for further continuation to the downside. Unfortunately, yesterday we did put a lower low. So after having a lower high and a lower low, we can say that from that perspective, we have damaged the bullish structure on the daily time frame. But the question is, how much have we damaged that structure really? And for that, I'm gonna focus on the RSI. The RSI is gonna tell me momentum. And the momentum on the RSI has done something incredible. It has managed to bounce on this trend line almost perfectly at this point. The last time that we did this was on the 7th of September. And before we had a bounce on the 5th of August. This bounce in here in the price gave 31% to the upside, whereas this bounce in here gave 26% to the upside. And at the moment, this is still in the process of being confirmed because this candle is live and as of now is pointing up. But within the rest of the day, this candle has a lot to say. If we were to close the daily and the candle ends up like this, breaking that structure that yesterday we managed to hold, then we will be breaking the daily support on the RSI. And that will pretty much guarantee that we can continue below this yellow trajectory, possibly even crossing to the right hand side, but still to the downside. If that happens, we're going to continue monitoring RSI to look up for a potential reversal. If we connect the dots, the 4 hour is telling us as an early indication, but with lower quality than the daily time frame, that there is a potential to get to 62 or to 64k if we manage to get to the top of the range of what the 4 hour can do. But remember, this is a call on the 4 hour time frame, and 4 hour time frame can fake us out. It's a lower quality signal, and if it did that, it will cause the daily to break down. If the 4 hour is telling us the truth and we go to 62 or even better 64k, at that point we will see the daily time frame on the RSI to confirm that with a breakout to the upside. And after having this confirmation, we can start looking for similar results of what we already have on these two bounces on the same trend line. And I repeat, this one in here gave 33%, this one in here gave almost 27%. So it wouldn't be crazy to think that this can make a move of 20%. And a move of 20% from this particular low puts us roughly at this high that we already have in the forecast. That will mean a bounce from the golden pocket on the Fibonacci level, as well as we can see on this move. As well, that these three candles green in a row that we have on the weekly, which are called the three white soldiers, are actually playing out, because what they promise is further continuation to the upside. And this bounce into this golden pocket will turn into just a healthy test of support. We are at the moment in the middle of a capitulation event from the miners. This is the hash ribbon indicator, a famous indicator that once it prints buy, it has pretty much never failed. But as a short update, the previous buy signal was printed roughly at 66k, and it still hasn't managed to have any upside. In fact, right after it print, we started going up in this area, and then we went down to 49k. And now we are in the middle of a new capitulation event. The capitulation happens in this indicator based not just on price action, but based on the hash rate of the actual Bitcoin network. The indicator allows you to see the hash rate, so let's enable it, and you can see that the hash rate has been fluctuating down, causing the first capitulation, and with these big spikes to the downside, it ended up causing that the MAs that the indicator is using produce a bearish cross. At this time in the market, in the previous cycles, September, October, and November is very typical to see a capitulation. For example, around here in November in 2020, 4 years in the past, we started a capitulation event on the 29th of October. Interestingly, the price continued rallying 45% to the upside. During the capitulation, eventually the price had a correction. This correction from the top made a move of 15% down. Once the capitulation was completed and we were back to the same price of roughly 19k, which coincides with the previous all-time high, we started the actual rally. If we were to repeat something similar during the recent price action, we should be expecting as well the price to continue going higher during the capitulation event for as long as the MAs are still showing red in the indicator, having some sort of rally to the upside, and eventually causing an actual price capitulation of 15%. This is just past performance, but it gives us a rough idea of what to expect. Things might not play out in the same order or in the same timing, starting with the fact that at the moment the price is not rallying, it's actually having a correction, which already is different from 2020 and 2016. On the weekly time frame, at the moment we have kind of a mixed bag. Something very bullish is showing us on the lower end, the RSI on the weekly, which is the fact that we have confirmed a breakout thanks to those three white soldiers on candle pattern, and we are in the process of retesting this breakout. Unfortunately, the stochastic RSI on the weekly has a different word to say. This candle that is still in progress this week, which closes on Sunday, is at the moment in the process of confirming a bearish cross. We have had already 4 bearish crosses at the bottom end throughout the past 6 months, which is something unprecedented. It's quite difficult to find in the past something similar to what we are witnessing in here, but not going very far. In July in 2023, we also have a bearish cross roughly around the same area. And after that, we had a capitulation of 20%. So could it be that this stochastic RSI is just forecasting the upcoming capitulation from the hash ribbons, the miners? It could be. Guys, I'm very bullish on Bitcoin, but at the moment, my stand is to add more to my bags. I think that we are gonna get some very big opportunities to buy more Bitcoin at a discount price. I'm gonna show you next in the video the levels that I'm planning to buy based on liquidation pools, areas that are high quality for a potential reversal. And then I'm gonna explain why I think Bitcoin might need a little bit more of chopping sideways and slightly bearish before we can actually break those levels at the top. Starting with the liquidity. The first level that is quite attractive for me is 57K. And you can see here that there are tons of stop losses accumulated at that level. It also coincides with the target of this ABC correction after this ascending broadening wedge breakdown. If price was to fake us out on the 4-hour or see a strong rejection at the conservative target 62K, there is still a high chance that we complete that target at roughly 57K. That's my first area of buying that I'm considering to use, placing limit orders to add more Bitcoin at a discount. My second level of interest on Bitcoin is based on this liquidity in here. Notice that this is larger than the liquidity that there is at 57K. Zooming out a little bit further, you're gonna notice that the largest level of liquidity at the moment, even larger than the top, is this bottom in here at roughly 46 to 48K. That, in my opinion, is a golden buy, and I will pretty much expect at the very least to see in here a strong bounce just because the amount of liquidity that there is here is mental. Notice as well that I'm not counting on the price to get to all of these levels. And the reason I'm buying at 57 if we get there is because there is a chance always that we only get to 57. I'm already holding below 60s in my average, but I think adding a little bit more at 57 is a good thing. And if we get lucky and we go to 51 or to 47K, I will be adding even more. So now the question, why am I expecting downside for Bitcoin? Well, I already hold sub 60s. So if we were now to continue to the upside, the amount that I have is pretty decent, but there is still a chance that we can go lower once again. And I don't want to miss that opportunity if it happens to add more to my stack. And the main reason I still think that there is a chance that we go to lower levels before we actually break at the top, and I'm happy to be wrong on that, is the fact that for Bitcoin to produce a leg to the upside, impulsive, strong, similar to what we saw from April 2020 to 65K a year later in 21, is because that requires a very specific equation of aspects playing out at the same time. In a nutshell, Bitcoin works as a hoover of liquidity in the system. Sometimes it doesn't mimic the S&P 500 or Nasdaq, but what Bitcoin really respects is a good injection of liquidity in the system. This yellow line in here represents the global liquidity index, and as you can see from the COVID bottom, it was injecting liquidity like never before. And if you follow the line, you can see that it's been constricting, putting lower lows and lower highs, meaning that with every month there is less liquidity in the system. Recently, there were some news of injections from China. You can see them here, but relative to what we had during this big pump of 200% from September 2023 into March 2024, this is even less than half of what you see in there. So yes, China is injecting liquidity, but nothing as substantial as this period of injections in here. Still putting lower lows and lower highs. We had a breakout of liquidity in here that we are currently monitoring both in the chart of the price and on the RSI of that. But after the breakout, it came back below the range on the RSI, and that is showing us that injection is still not as big as required and nothing compared to what we saw during the COVID crash. Second, you need quantitative easing in the market. That means that the Fed needs to be buying bonds and injecting liquidity into the system. But contrarian to what we are expecting, you can see that the Fed is still putting lower lows and lower highs in their liabilities, similar to what we had from May 2020 into August 2020. At that point, Bitcoin was still going sideways, and it only started moving up once we broke out and we entered into quantitative easing. Pretty much Bitcoin after that mimic what the Fed was doing with their liabilities. In this area in here, if we continue to see the Fed selling, why should we expect Bitcoin to do something different? Bitcoin price action looks very similar to what the Fed is doing so far. And the two last components of this equation of liquidity needed for Bitcoin to make that impulsive move up are the dollar and gold. At the moment, dollar is breaking out to the upside, so it's going in the opposite direction that we want it to go. If you look at 2020, after we had the breakdown of the dollar, that was the best time for Bitcoin to pump into 65k from below 5k. Seeing the dollar breaking out and coming back inside this pattern with a double bottom formation in here is, at the very least for the short term, something putting a lot of stress on the Bitcoin price action. And when looking at the gold, you can see that once the gold rally topped in August 2020 and it started coming back down, that was the best time for Bitcoin. How can we explain this? Well, there was a lot of liquidity coming out from gold, and gold represents safety, and people were exiting safety into risk-on assets. We can see in the closest proximity to the price is that gold seems to be in the process of looking for a top. We have bearish divergences on the weekly time frame, and we have this support that we are constantly flipping between being below and above during this particular week. We also copied these patterns of candle into here, and we've been speculating that the recent moves of gold could be getting very close to a top roughly mid-October. If we were to repeat that price action, that will definitely influence the price of Bitcoin. Remember, we have 4 legs: global liquidity, Fed strategy, which is quantitative tightening or easing, gold, and dollar index. All of these 4 components are very important. Alright guys, thanks so much for watching. I'll see you on the next one. Bye bye.